Today, we'll be looking into how to prepare for success in trading and investing, explaining how to create a proper trading plan and how to cope with unexpected events. Let's first look into how to create a proper trading plan. Having a plan is essential for achieving your trading goals. You should create your own custom plan and include what you think would benefit you the most. But it's generally a good idea for a trading plan to have the following components. Number 1, a skill assessment. Honestly assess your level of trading and investment knowledge and review your strengths and weaknesses. Number 2, set a risk level. Decide how much of your portfolio you're willing to risk and then stick to those boundaries. Number 3, set goals. Before you enter a new trade, set realistic profit targets and risk-reward ratios. And number 4, conduct market research. Always be aware of what's happening around the world. Number 5, prepare for trading. Open your trading platform and label all major and minor support and resistance levels on the charts and set alerts for entry and exit signals. Number 6, set exit rules. Determine your stop loss as well as your profit targets. Number 7, set entry rules. Write down conditions that must be met before you enter a trade. And number 8, analyze your day no matter what happens. Conclude your trading day by analyzing the events, noting your profits and losses, and evaluating your actions. While a trading plan should always be written down, it's also important to be able to know when to reevaluate it and adjust it according to changing market conditions. And most importantly, a good trading plan should always consider your personal style and goals. Here's how to cope with unexpected events when trading. No matter how solid your trading plan might seem, there are always some surprises along the way. But with a good understanding of how the market works and proper planning, even the unexpected can be turned to your advantage. One of the most basic rules of trading is to trade in the direction of the prevailing trend. Trend trading entails identifying whether the market is in a downtrend or an uptrend, and then riding the waves of that trend. To be able to determine this, it's good to have as much information as possible. The XTB trading platform features detailed market analysis, which provides traders with a real advantage in terms of looking for and identifying potential trading opportunities. However, it's also important to mention that markets do not always trade in clear trends. There are stabilization periods in every market, which are also known as sideways trends. The key is in recognizing when this happens, keeping a cool head, and rationally deciding whether to start range trading or wait for a breakout. To be able to successfully cope with the unexpected, it's crucial to have a good risk management strategy in place. The basics of risk management include having a detailed trading plan, being able to control your emotions, and having a solid money management plan. Make sure you subscribe to XTB and learn more about trading and investing.